The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Happy Monday. This is Steve Gomez, your number 03 user in the Trade Ideas database, and here to introduce today's office hours instructor, Jamie Hodge. Hello, Jamie.
Steve, happy Monday. How are you?
I'm good, and I hear you loud and clear. And if anybody can please chime in on the questions box, just let us know you see a picture of Albert and you're hearing us going back and forth. That would be a big help. Great, thank you. Before I turn it over to Jamie, I like to do a quick poll. Some of you who are regulars know the drill. There's going to be two quick polls. The first one's very simple, very binary. Are you a Trade Ideas active subscriber, or no, I do not have an active subscription of Trade Ideas? And there we go. So I'll leave that open as you all vote. I'll wait for a quorum, which is typically 70% of our audience. I'll share that first result with you. It does come in handy sometimes for us to kind of know who we're talking to. It helps us gear the content going forward. A couple more of you. I'll wait for you. All right, we got ourselves a quorum. So let's close and share. Interesting. Today we have a lot more non-subscribers. Typically it's like 2/3 active subscribers and 1/3 non-active subscribers. So almost a 50-50 split, 42-58. Good to know. We've got some fresh people in here today. Keep in mind I'll have a promo code for you on the end of the program with a slide that can save 15% off if you're a new person thinking about kicking the tires. And Jamie will explain some of the virtue and the values of that going forward with that 15% promo code and what we offer in the first month. Let's do another poll real quick. The second poll is only the people that have subscribed. Are you a premium user, or are you using the standard version of Trade Ideas? And there's the next poll real quick. And I'll wait for us to get just a quick majority out of the way. And then we'll turn it over to Jamie, and I'll have a couple things to say as well on the Monday webinar. Yeah, and this one is kind of shaping up more like traditional. Again, we're just talking to the people that have an active subscription. Wait another couple seconds and then I'll close that out. All right, go ahead. Perfect. I'll go ahead and close that out. And let's share. So the majority of the people, 2/3, looks like they have the premium version, and 1/3 has the standard version, which is great. A lot of people start off with the standard version and find that that suits them just fine. A lot of other people start off with the standard version and then learn it and then kind of take the leap to the next level with some of the more sophisticated tools that we do offer in the premium. Okay, so very good. Thank you for participating in those polls. Let me hide those polls, and now we're back to the main slide for September 25th, office hours, Trade Ideas. Again, my name's Steve Gomez. I'm hosting and helping. This is being recorded for those of you that show up late or leave early. We'll do our best to get this video rendered and back up on the Trade Ideas YouTube channel here, probably within a couple hours of the termination of this webinar. So with that said, the question box is open. We'll try and answer questions as we can. It's better if you try and save them towards the end, but we'll do our best to keep an eye on that questions box. And thank you so much. I'm going to now turn it over to Mr. Jamie Hodge.
Well, thank you very much, Steve. Welcome, everyone, to another edition of the Monday Office Hours. Today is September 25th, 2017. And wow, the months are just flying by. September's almost history. So just once again, I want to thank everybody for attending. We know your days are busy, so we like it when you come here, speak about what happened in the market today, and then more importantly, how we can use our technology to capitalize. So before we go on, just want to get the legal mumbo jumbo out of the way, make the attorneys happy. Just want to make sure that everybody in attendance, not only this webinar, but every one we do, is strictly for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or a licensed broker that is legally allowed to give you buy and sell recommendations. So once again, everything we share with you here today, strictly for educational purposes. All right, so before we get going here, for the people that might be here for the first time or that aren't too familiar with what we have going on here at Trade Ideas, just want to take a brief moment to let you know, not only do we have the technological wizardry that is Trade Ideas, but we built quite the community around the technology. We've got Barry's trading room, starts it all off. Barry opens the room before the market every day. He is a wonderful moderator. If you haven't been using that feature, which by the way is free, if you haven't been, going into the trading room and seeing what that's all about, you're shorting yourself. So if you don't have an account over there, go ahead and open one up. And the nice thing about it is that you don't even have to be a subscriber to get in there. You can see how everybody else is using it, check out the vibe of the room. Typically anywhere from 400 to 600 people in that room on a daily basis, and Barry does a great job at showcasing the technology and sharing his trading methodology with the room. Now, of course, today's Monday, it's myself and Steve, but we've got these 1-hour webinars Monday through Thursday. So myself and Steve on Mondays, Trade of the Week. Steve takes control of the helm tomorrow for the Trade of the Week webinar. Then we bring Dan and Brad, Chief Executive Officer, Chief Technical Officer in, change things up a bit for the Wednesday Q&A, and then Andy rounds out the 1-hour webinars on Thursday, and I ride shotgun with him. Now Friday we change it up a little bit. We do a 3-hour webinar from 11 a.m. to 2 p.m. Eastern. Now this is more of just an open forum, come one, come all, anything trade ideas related, we can get you taken care of there. So that's what we have going in the way of webinars. Just always like to point this out because the trend is continuing. Since we introduced our AI module, we've seen a large influx of subscribers, and that trend continues. And of course, we're going to talk about Holly, the AI, how she performed in today's market. Very impressive. Lastly, this is a new module that is still in beta and is gaining quite a bit of traction over at Interactive Brokers. People keep piling on, using this thing to execute for them and to make trading organized in a little bit better fashion is what we've tried to do with this thing. So if you're an IB user, by all means, you probably want to check it out. So works with it's a plugin for Interactive Brokers. You can use it in the live or the demo environment, but it allows you to take strategies that you put together using our oddsmaker backtester. It's a statistical backtester. So if you have something that looks good, you can put it in here and have it automate your entries, automate your exits, do one, not the other. So it's what we call gray box or black box. So if you're an IB subscriber, you may want to try this out. It's already resident in the system. Anybody that has premium functionality has access to it. Now the kicker here is that once it comes out of beta testing and we officially release it, there will be an additional charge for it, somewhere to the tune of, I think, around $1,000 if you want to use that module. Now the good news is, if you're already a premium subscriber, when we take this thing into production, you're grandfathered in, free of charge. So keep that in mind. All right, so lots of interesting things, trading events, observations to be had today. Here's what we're going to talk about. Of course, I'm going to let Steve talk about the indices and the major, or just the overall market moves, what was moving, what was not moving. We're going to get into the Holly recap. Very impressive performance from Holly today, considering the market conditions. And then we're going to get into the compare count readings. I'm probably going to touch base on that before Holly. Just kind of got things out of order there. And then we're going to take those compare count windows a step further. I've got something else to give to you guys that are here today as far as the compare count windows and enhancing the functionality, being able to look down a little deeper as far as the sectors go. So, Steve, if you're ready, I'll just swing it back over to you.
Go ahead.
And we can, let's see here, there we go. My buttons relieve me. There we go.
All right, and while we're switching screens here, I did notice that Jamie forgot to mention the one-on-one sessions. That's part of the onboarding, the webinars, the Friday Tech Support, Barry's Live Room. But when you sign up for a new subscription for just a 1-month minimum, it's about a 7 to 10 day wait, and that's okay. We've got a bit of a backup. It's a popular program, but those 7 to 10 days can really help people kind of get a list of questions, get their hands dirty, get in the program a little bit, and it makes the one-on-one sessions go a lot more smoothly rather than just opening it up for the very first time and unboxing it for you. So the one-on-one session is typically a $99 value if you want to go beyond the free one. But what I'm trying to say here, guys, is with the 15% promo code that we're going to have at the end of the session and the free one-on-one hour session, there's really a great, compelling story to try Trade Ideas for a month and get that 1 hour coaching, and you will know within 30 days if this is the right program for you. And you know, judging by that slide that Jamie showed earlier, a lot of people are liking it. Okay, market recap is my job. All right, so let's start with the spiders, the S&P. We had an interesting day. There was a bit of a fit thrown in a certain sector, but we'll get to that. But on the broader context here, the S&P, look at how this trend line has kind of come back into play again. I've kept this thing alive and kept it going. But in beyond that, that prior breakout, this line right here, prior breakout, we came down and basically kissed it, pretty close to kissing it, right on the screws there on the S&P today, and that's where we found the buyers. So S&P's not really showing anything of any negative nature. Path of least resistance is still up. It tagged that level perfectly. The buyers stepped in where they were supposed to. Trend line still intact. And the prior resistance, which is now current support line, is intact. And then, of course, this wick here, this end-of-day buying wick, it's probably one of the better wicks of all the indices. Let's take a look at the diamonds. Diamonds had a very nice end-of-day purchasing wick as well. You can see this gap was filled for the most part, and this smart stop was kind of taken out but held for the most part. So diamonds a little bit of a pullback, but still above their breakout. Path of least resistance still seems to be up for the diamonds. IWM, we talked a lot about that last week, and this thing has been making a couple waves. On Friday it broke out and then pulled back. Today it broke out and then kind of pulled back. So there's been real no conviction in terms of the Russell 2000 IWM breaking out and holding a close on highs and holding a close really definitively above here, but still moving in that direction, making waves. If it continues, keep an eye on those small tech stocks. We just had the Blue Angels Air Show here yesterday. Let me close my window because they're all bailing town today on their own time here. Hang on a second. All right, let's try and take some of that jet noise away. Now, I saved the Qs for last for a reason. Qs did not have as much of a good of a day as everything else. We can see right here. We are back down way below these pivot points, and we actually did bounce off the lows and got half of it back. But what was going on here? Well, let's take a look at our Fang stocks, shall we? The Fang stocks. Well, let's start with Facebook. Ugly. Ugly, ugly, ugly. Not a whole lot of good ways to spin that chart. Okay, Fang. What's next? A. We can either go Amazon or Apple. I'll choose Amazon since if you guys ever wanted to see what maybe a textbook Head and Shoulders looks like, go ahead and imprint on Amazon. So I'm picking on some individual names here. I'm not picking on the indexes, but I'm telling you, the Fang stocks, the Facebooks, Amazons, Netflix, ugly day today. Not much of a bounce. Down candle, found some support, probably right about where it would be expected. Oops, I don't want to type. I wanted to just pop in a horizontal line there. And Google to round out the Fang. Google was the best of the four, actually put a nice end of day buying wick on there. So with that said, you know, the big guys really put the NASDAQ under pressure today. So 1 out of 3 of the indexes not looking as healthy as the other 3. The other 3, path of least resistance, still looks and appears to be up. Late day buying came in, but the story of the day again was an ugly red candle in Facebook. Let's take a look at the metrics here. Facebook down on 3.6 times normal volume, down 4.5%. Ugly day. 3 times volume on a downside day. Not exactly what you'd want to see, but we'll see if they recover. Typically, this market has a funny way of recovering after one of the plates on the Ed Sullivan Show stick starts to wobble. So there's that one. I don't want to just keep repeating myself again. Amazon, we're going to need to watch. This is definitely a critical level here. Down here, this is probably what many people would consider the neckline of the head and shoulders. This being the head, this being the left shoulder, right shoulder, and this being the neckline. So tomorrow, we're either going to have a bounce back on light volume, like we've been seeing a lot, or if these big guys, Fang, Facebook, Amazon, Netflix, Google, decide to start taking out some of these levels that we're showing as support today, we could have some further erosion in the tech land, and that could bleed over. We'll see. But for now, everything else seems to be kind of okay, except for tech land. But let's just take one more deeper dive here in the sectors today, because it really wasn't as good as I think people think. What was strong today? Oil. Oil gapped up out of a technical level. This is the actual commodity. Oil services were also strong today. Gold miners, gold and silver. Well, these are all pretty defense-laden names holding up the court today in terms of what was the strength in the sectors. Downside, China stocks, TAN, which is solar, we'll come to that in a second, semiconductors, technology, steel, XLK technology, Qs, et cetera, et cetera. So technology, bad day, energy, and gold and silver, good day. And that's just kind of how the day shaped up. So the reason I touched on TAN having a bad day, typically I don't like to go too far into it because tomorrow is the trade of the week and I'd like to get another day of data in there, but JSO was the trade of the week. Going on Friday, we had this tremendous downside washout candle that bounced right back up and closed near highs. And you guys have heard me talk a lot about the washout bounce and how after we see these types of long candles, the upside volatility can be mitigated going forward for a few days. And that can be a good thing. Well, in the case today, we just never really got out of the starters blocks. Solars were basically hit from the get-go right on the open, and JSO did not trigger. If you read the content of the trade of the week closely, it was contingent upon a trade above 795, which we never got today. But for the rest of the remainder of the week, this trade is open. There's nothing to say that solars can't recover tomorrow and maybe try and build off of that wick. But for the time being, we do not have an active trade of the week unless JSO trades above 795 or 796 sometime this week. But going into the weekend, that was the play, trying to use this nice stock, which, by the way, look at all the volume here. If you can see it, the volume has doubled over the last 3 weeks of what it normally does for a 3-month, and it's been doing it with a nice uptrend. Well, we got ourselves some congestion, some flagging, and then this whoopsie doodle, which is usually the algos hanging people upside down, shaking them out, trying to shake loose the shares from the weak-handed longs. And then if they bounce back up like it did, typically, if we can take out the high of that day, we can have a nice swing trade moving higher. But the problem is right here, double click, TAN, the sector, just fell asleep, went to bed, about face, hit the whatever you want to call it. It did not do well today. So JSO, the trade of the week, is not active unless we get a trade above 795, and the solar sector needs to kind of shape up in order for that to happen. So those were the things I wanted to talk about. Just a real quick rehash. Spiders and diamonds. The path of least resistance is still up. But the Qs, because of some of those Fang stocks we saw today, Facebook, that's an ugly looking candle right there. Amazon, that's an ugly looking possible head and shoulders right there. So we're going to keep an eye on the big four horsemen, and see if they can bounce back from some of the weakness that they did in fact show today. And that's all I've got for the recap. Anything you want to add, Jamie?
Nope, nope. You laid it out pretty good. You know, we all saw it in real time as we were in the chair today. So, you know, it's bouncing down to the bottom of the range on the SPY, and the Qs are a little bit different of a story because those things sure do look ugly, those main components that you pointed out.
Yeah, Facebook and Amazon especially.
You know,
All right, let me pass the baton back to Mr. Jamie so he can talk about some other stuff of interest. There you go, sir.
yeah, and of course you could hear, you know, you can imagine on social media and the other networks we keep our ears tuned into, you know, you got half the crowd out there going buy the dip, you got the other half going, things are getting nasty. Of course, that's always pretty much par for the course. We'll figure it out tomorrow as it unfolds in real time. Okay, so we got Holly to go over, and boy, what a performance considering the market conditions today. And we're going to kind of lump these two topics here together. First off, I'm going to skip around and go down and go, let's take a look at the compare count readings before we get into the Holly individual trades here. Got a little slide right here I just pulled out of my Twitter feed. And hopefully everybody, yeah, that's nice and big. Okay, so these are the compare count readings after the opening 20 minutes of the market today. And of course, I've got everything chopped up into market caps. Anything 5.4 billion or higher is in this one. This one's just a small degradation of 4 billion higher. And as you can see, pretty much no difference there. After the first 20 minutes, what did we have? We had 64% selling with heavy volume on the big cap stocks. Now, of course, over here in the smaller ones, and then what we saw the IWM doing today, obviously there's buying in the smaller cap stocks. That's why the IWM has been going up, up, and up from that last bottom that it put in. But very interesting and valuable data today, because these are pretty much the things that are going to pull the market around on any given day. And so when we see 64% either green or red, then we definitely need to take notice. And just to recap, what are the readings, what's important, what's not important, when are things more likely to go than others based on these readings here. And of course we have to kind of fold it into what's happening in the market. A lot of the times, and let me just get my chart back up here. Oops. A lot of the times, you know, let's see, a couple days ago, you know, here we are today, and I just rewound it to where we can see Thursday. Sometimes we have openings like this, which kind of make the compare counts a little bit harder to read, because we'll have either a downdraft right on the open, so everything's going to be showing down, or a run up. But it's the days like this that I find the most interesting, because here we are on the SPY. Of course, we're looking at 5-minute candles right now. So 5, 10, 15, 20 is this red bar right here. This is where I took my compare count readings, and you'll notice it doesn't really matter if we're looking at the SPY or we're looking at the Qs. 20 minutes will be about right here. So pretty much the same old song and dance, whether we're looking at the Qs or the SPYs after the first 20 minutes today. So I'm getting these readings, 65% sell bias after 20 minutes, and we got this nice little kind of, you know, flat area here, and I'm thinking to myself, okay, these are very strong readings to the downside, and we haven't had a run like on Thursday. So at this point, what do? We temper our expectations with those readings. We go, okay, well, I'm showing a lot of sell pressure on these big cap names in the opening 20 minutes. And the whole theory behind the compare count windows is that if you program them properly and show them what to look at, in this case the big cap stocks, there's always going to be institutional selling and buying in any session. They can't get it all done in the opening 5, 10, 15, 20 minutes, but they can get a large portion of it. Then they have to slice and dice for the rest of the day and try to get that order done, whether it's long or short, and have minimal market impact. So they leave footprints in that opening 15, 20-minute period, and that's what the compare count windows were designed to pick up on. So just let me go over these readings one more time here. Anytime we see a bias of, say, under 55%, let's say we would have seen 53% today red, and 47% green. If I would have seen that, I wouldn't be getting all excited, all right? Typically for a bias to really have sway over the market, with my experience in watching these windows over a number of years, you typically need to get above the 55% level. Now that's not always the case, but it's kind of like the water flow. Hey, the faster the water is rushing down the river, the quicker you can get expected to be pushed down the river. Of course, it might be violently, but in other words, a bias above 55% is really when my ears start perking up. The closer we get to 60, even better, and then over 60, it's a lot of the times, unless we have a big swoosh or a big run up on the open, these are very accurate. And today was a perfect example. So 64% to the downside, and after the first 20 minutes, I'm thinking, well, market doesn't look like that, but what's to be expected? What might happen? And of course, we did have a little gasp to the upside on some relatively anemic volume, and then when we curled back down and broke this level here, once we start seeing this big red bar here, hey, that's gonna lean credence to what I was seeing. And then once we crack this line here and bust that range, boy, it was really on. So the compare count windows did a fabulous job today at helping me temper my expectations, and looking at it from, say, this standpoint. All right, maybe even if we didn't have a huge move down, which we did today, relatively speaking, shortly after those readings were taken. But what it also tells me is that if you're going to be long today, you better think about pairing your gains quickly and being very tight on the second half if you hope to get a little bit more. Today is not a day where the runners are going to be to the upside, even though we did have a couple that kept on going today. Of course, they backed off like everything else, and they were holly trades, and we'll get into that in just a little bit. But compare count readings performed spectacularly today as far as what to expect from the rest of the session after that 20-minute mark here. So let's go on and talk about holly. And by the way, not going to get into it just yet, but these windows have been well received by a large number of users, and I've got a little something to put on top of that before we're done today, using compare count windows to further drill down and not only look at overall market movement, what might happen, expectations on the overall indexes, but how we can even take those windows and chop up each sector so that in the future, you got your overall compare count windows looking at market cap, which have been very good indicators as of late. And then in the future, you'll be able to set up a compare count window for each and every sector, looking for the sectors with the accelerated volume in the same capacity that we're looking at the overall metrics on the big cap stocks. So we'll get to that in just a little bit. Now let's go take a look at what the AI known as Holly did today. And so what I'm going to do here is just show everybody the Holly panel, the strategies panel. And before we get into the content here, last night pulled up my trade ideas, saw this collection of strategies that Holly had prepared for the next session. I'm thinking to myself, okay, we got 12 strategies showing up, and typically this is the larger number of strategies that she shows up with. A lot of times if I see, it's 12 to 14, that's been the high count, maybe even pushed up to 15 one day. But when you see 12 to 14, I was thinking to myself, when these came out, well, actually, this optimization was done on Friday. I just didn't bother looking to see what was there until last night. In any case, so we had 12 strategies Holly brought to the party today. We can see all of those, with the exception of these three right here, were long strategies. And of course, just because a strategy shows up doesn't necessarily mean it would fire. And that was one of the things I was thinking in the back of my mind. Of course, these are my human thoughts based on what I've seen in the past. And I'm thinking, well, I sure would hate to see her overtrade, with all these strategies. But of course, every strategy here is a very finely laid and intricate trap. Has to be something very specific to trigger these trades. And so we can see 1, 2, 3, 4, 5 of the 12 didn't even fire a trade. This guy was the leader with 4, 2, 2, 2, and 1, 1, 1, respectively. Now we can see the overall stats here. And then we can see Holly really didn't get active. She got active relatively early today, 15 minutes into the open, and got up pretty quickly. Of course, opening 15 minutes does not a day make. So looking at risk on today, risk off, immediately up, and then of course a nice little pullback on risk off, and the same with risk on. Now today, obviously due to the nature of the market, not a risk on day. You know, you could have went risk on if you were trying to scale out as these ebbs and flows occurred, but risk off, definitely a much sounder equity flow chart today. So let's take a look at what Holly had in store. Now, what do we have? 13 total trades right here. And once again, the bias was long. Only 2 times did Holly try to dip her toe into the short pool today. So, you know, after this first little flurry here in the opening 30 minutes, all longs. So I'd say right here, Holly was pretty much kind of setting her tone. All longs, a couple more longs in the second in that 8 o'clock hour, 11 o'clock Eastern time, and then a couple of shorts. Now, AWI, let's just go ahead and look at the shorts here. Really nice looking entry here. It just didn't want to give anything up. We got down here, started doing a little flat line. Pardon me, everybody.
You got hit by a truck.
Steve's got the jets up in the air. I've got the ground jets rolling around over here. The perils of keeping windows open in Southern California, but well worth the noise interruption from time to time. So we can see here, AW, nice little top tick entry that Holly called. It just didn't want to give up much. The other guy, shorting right here as this little range was being broken, and once again, just didn't want to give up much. Now, of course, looking at the major indices here, let's see, this was the 8 o'clock hour. We can see these shorts were pretty much put on after the market had kind of started to catch a little traction off the bottoms, whether we're looking at the Qs or the SPYs. So it kind of makes sense. But the impressive statistic, in my opinion, today is that when we're looking at this market and we've got the big swoon down and then just kind of ebbing and flowing like the razor blade seesaw, but in the lower extreme, Holly performed spectacularly today, making all of her money long in a market that I think probably a lot of traders were a little scared to push the buy button on today. Now, we're going to talk about these 2 trades right here, ECPG and LL, because they're what we call risk-on trades, right? We can see Holly plucked 40 cents in her conservative mode, which is risk off, simply meaning she's obeying her profit targets and her rule set, stop losses, timed holds, profit targets, which each and every one of us has. We have to obey our rule set. And then she only takes 12 cents on LL. But when we look over at the risk on column, and let's just get the ECPG trade up here. Nice entry right here at a nice round hole number, 42, all right? And then of course, this is one that just kind of takes off and goes immediately, sets another little plateau right here before moving higher. Now sometimes they go immediately, as in this case. A lot of the times we'll see a Holly trade get long, and it'll vacillate, coming up and down through this entry signal. But the important thing to point out is that the statistical probability that Holly generates is good for the day. It doesn't necessarily mean it's going to go immediately. Sometimes it may take 2 or 3 pulls before here, before it goes on. Sometimes they'll take 2 or 3 pulls before they don't work. But more times than not, you know, we're seeing this type of action, or maybe a couple of pushes through, and then we go. Now, the shaded area right here is risk off. showing you this is the period that Holly was in the trade. This was upside, this was downside. Of course, we can clearly see the stop loss was marked over here, took a little breather right here, but was never in any danger of being stopped out. So we can see right here on the cusp, this is where Holly decides, I'm going to get out. Why did she get out? Time stop. One of the 5 reasons why she can get out of a trade. Stop loss was hit, profit target was hit, timed hold was hit, or profit save or reduced risk was initiated. Now, while we're on the topic of profit save, well, we'll just save that for LL here, but we've recently enhanced Holly's exit functionality. So risk on, let's talk about that. It's best to talk about risk on from a trade-by-trade basis, is my opinion, because it makes it a little bit easier to wrap your head around if you're new to the concept. So we see Holly getting out right here. Let's say we were in a couple hundred shares with Holly. We see Holly getting out. The best way to get used to it is to do a little bit of both. Okay, now why would you stay in and risk a little bit more? And the simple answer would be, you like the chart pattern, you like what's happening, it makes you comfortable, you're willing to stick in the stock, make a little bit more money, hopefully. So we can always peel out of half that position with Holly and go, okay, I'm going to book my 40 cents on that first 100, and I'm going to go ahead and keep the rest, or the other 100, because I think this thing is just taking a little breather like it did down here, and I think we got a little bit higher march in the future. And had you done that on the second lot, you would have been rewarded an additional 45 cents for a total of 85 cents. So that really is the way to take the mystery out of risk off versus risk on. If you get out with Holly, that's risk off. If you think there's more juice in the trade, you're going to stay in maybe the whole position or half the position in hopes of getting more. But the name of the game is making something, you know, if you're just taking risk off profits, that's fine. But we've got a nice 45-cent spread here between risk off and risk on. And my motto is, I might not get all of this. Very rarely will you top tick anything or bottom tick on the other side of the coin. But man, there's a lot of juice left in there. 40 versus 85. You got another 45 cents in there. Hey, if you only capture 10 cents, 15 cents, 20 cents, that's great. Now the other trade around, not trade around. We usually have some trade arounds. Not today. It's all risk on. And since I'm bringing that term up, what is a trade around? And it's typically something that we see Holly get stopped out of or take a small loss on in the reduced risk mode or the stop loss mode. Nothing hit stops today. But for example, tan H. That was a long, right? Yep. That was a long up here, and of course, immediately did not work. However, we can see the blue line there. Had tan H or had Holly taken a loss or been stopped out, and then later on in the day, tan H comes and breaches that level again, that's what we could call a trade around. Hey, I saw Holly not do too well in it, get stopped out or execute a reduced risk, but now it's flirting with that line again, and I'm going to take another stab at it. If it never gets back to the line, no harm, no foul. But a lot of times when I see Holly down in a position, I'll just immediately set a price alert and go, okay, this way if it cycles back up there again, I can find it, or I'll be alerted to it easily, and then size it up at that time and see if I'd like to participate. That is what we call a trade around. None of those on the blotter today. But let's talk about the next risk on. And of course, there's another trade we're going to have to talk about here as well, and the name Court. So Holly right here gives us an entry signal here at the 37.27 level, and then it was just pretty much off to the races. Get thrown a little bit of a wick down here back to the entry level, but not even punching through it, and then just a nice boom, boom, boom up to the highest point. Holly takes 12 cents, getting out in this bar here. Of course, this one not quite as pretty. It did take another little leg down here. Probably would have made a lot of people nervous. But once again, stocks do this from time to time. It's not always an easy ride. There's a little pain. Now, keeping in mind, it still never got anywhere close to our stop loss, but it did take this little excursion down and then ended up finishing higher. So definitely some money to be had in the spread there. You know, maybe you got out of all of it up here, or some of it, or some right here with Holly. And then once this bar closes and you see that wick, just like Steve was illustrating on the daily chart with the trade of the week and chase-so, that's a good indicator. Whether it's intraday or daily, it still means the same thing. Took it below the entry line, but they sure couldn't keep it there. And that's what that wick indicates. So this one might even been a good, you know, to re-enter here once you see that bottoming wick put in there, in my humble opinion. Now, let's talk about this little guy right here, Court, because you know what? Court just didn't care about Kim Jong and his nuclear missiles today because it just kept going up all day, gave back a little bit at the very end, and we can see the highlighted area here. Holly stayed in it for a good while today, and early bird, if we look at the timed hold, it's designed to hold pretty much until not quite 30 minutes, but 12:33, I guess. Well, I don't guess, I know, 27 minutes before the close. Kind of a weird little exit time there, but I guess that's what makes sense on the statistical feasibility studies that Holly conducts herself, or you know, Holly uses. So, Court, just a beautiful entry here, right at the 1881 level. And then we see that same activity. Just a nice little flat line, ebbing and flowing, up and down from that entry point, which not a bad little consolidation there. So the interesting thing about this one is that if you're in the trade here and you're just patiently waiting here, it's just time to draw these little lines here.
That's a nice tight range right there, isn't it?
Now, I'm in a couple of hundred with Holly. It's going sideways. I remember Jamie telling me that sometimes they go immediately. Sometimes they'll hug the line and go back and forth, back and forth, back and forth. But then, wham, when you have this range break here on this nice tight consolidation, after you've been given Court from early bird, which from a statistical standpoint was the percentage leader coming into the session. So let me reiterate how powerful statistical probability north of 50% is, right? 50%, 51%, a little over 50%, those odds work long term, and the higher we get above that 50% level, the better. So here we have early bird giving us a nice non-volatile entry on Court today. We know right off the bat it's got a 63% chance of working. We're in it, twiddling our thumbs, going, when's it gonna go? And then boom, we see the range break. Now we've got a range break. Now this might be some people's favorite pattern. It's certainly one of mine just due to its simplicity. So we're in it with Holly with statistical probability. Now we see a range break being exhibited. Very nice opportunity to add to this position. And of course, we can see what it did for the remainder of the day. Of course, some profit taking is going to come in, especially on a day like today. But some very interesting plays coming through Holly, and we're seeing all the risk off and the risk on data. But what really stands out, and this is a column I've been pointing out a lot more here lately, is the max profit column. Now I'm going to rewind a little bit because I said earlier we've enhanced Holly's profit save and reduce risk functionality. To backtrack even further from some previous webinars, it's a pretty common theme how we illustrate and talk about Holly's strong suit is statistical probability. By the way, I misspoke earlier. I said this guy came in with the strongest statistical probability. I didn't have that sorted properly. Wasn't the strongest, but it certainly wasn't the weakest, 63.2%. So Holly's strong suit is this statistical probability. Definitely it's her strong point, the entries. Hasn't been quite so good on the exits, but hey, we're a little bit better, and we read charts in human format where Holly does not, but we have enhanced the profit save and the reduced risk. So on any other given day before we implemented this new functionality, I'm sure Holly probably would have got out of court maybe right here as soon as things started getting a little more volatile, but you can see she didn't today. You know, she stayed in that thing pretty much all the way through because her advanced functionality is keeping her in more trades and the risk off category. So once again, statistical probability coupled with one of our favorite patterns. It's what I like to call 1 star for the statistical probability, tagging on a 2nd star because the chart pattern that we like to see is being exhibited. And once again, it doesn't necessarily have to be this one. It can be whatever your favorite chart pattern is. Everybody's got different ones, but this is one of the more simple ones to identify. All right, so enhanced profit save functionality, enhanced reduced risk functionality, and since max profit is looking only at risk off, what was the most she was ever up in the trade in risk off? Now, ladies and gentlemen, keep in mind, the day was slam dunk. Okay, look at that day. Look at those big red bars. Think about how that impacts people's mentality. But here we are. Here's Holly going, you know what? Yeah, I see this, but I don't care. My statistical probability is lining up, and I'm going to start opening all these long positions. Now, Holly takes 12 and double L. Risk on is showing 47, but look at max profit. That thing was up 62 cents at its peak. ECPG was up 60 cents at its peak. 59, 55. Every one of these was in the money at one point, even if we chop out the little bitty ones, which loser, loser. Only 2 losers on the blotter, but hey, they were in the money a penny and 8 cents respectively. These guys 2 and 6, but look at the rest. You know, look at the rest. I mean, how many humans put on this many trades today and were in the money immediately and longer in the day? I mean, that is exceptional performance, no matter how you slice or dice it. There's just no way to really, you know, showcase it any better than you can right here. This is the power of statistical probability, and it was done on a day where there was probably a lot of fear on the long side. Steve, anything to add to that?
No, but I mean, again, that's just a mess of a backdrop there. That's the backdrop of our market today. However, the AI decided to particularly have a long bias, except for a short period in the middle of the day. You can see a couple of shorts were fired, but they were quickly covered up with 4 or more longs afterwards. So, you know, it was a messy day in the backdrop. The AI said the directional bias is still long, even though I got some short strategies on the bench that are saying, hey, coach, put me in the game. There was no real reason to fire off too many short strategies based on the real-time data that is part and parcel of triggering these actual alerts. There's a lot that goes on behind the scenes. So, yeah, good explanation of how alpha hunting was definitely the name of the game today, playing on a forehand when the market was serving up backhands for the most part.
Yes, indeed. So, you know, even though Holly is not showing phenomenal gains on the risk off, risk on, you know, looking at this max profit column, and as traders, we always have to kind of, you know, temper our expectations and go, well, you know, yeah, this thing's moved up quite nicely. You know, whether we consult the daily to let us know, hey, it might be at the top, or any other metrics that you might be putting in play, overbought, oversold metrics, whether that's RSI or Bollinger Bands. You know, being able to be in these positions and potentially be up these amounts on a day like today, truly incredible. So we had compare counts telling us, hey, expect selling. And then we had this lag time and then the whoosh on the downside. And then we have the AI going predominantly long in this market and doing quite well as well. So, I mean, from a scanner standpoint, wow. I mean, where else do you get this stuff?
Hey, I've got a question. Frank Anderson asked a little earlier. He knows he's late to the party. He just purchased TI Pro, but are you going to go over or show how to set up a compare count window, or is it easier for you to share those for somebody like Frank who's asking?
Perfect segue here. All right.
Okay.
So, as I said earlier, I've got more or less a template to share with you guys, meaning it gets you started, and then there's lots of pieces that you can duplicate and point to whatever tickles your fancy. In this case, I'm going to be showing how we can use the compare count windows not only to judge overall buying and selling, on the big cap stocks on any given day, because I'll never stop using them in this format, but let's take it one step further. We know that those big indices are composed of different sectors. The market's chopped up into sectors. It's like the sub-housing, okay? You're a real estate stock, you go in this basket. You're an airline stock, you go in that basket, so forth and so on. So what I'm going to do here is I'm just going to pull my toolbar over. We're going to load from the cloud. And we're going to pull up this thing right here called sector heat. Now, before I do that, I'm going to go ahead and take the opportunity to drop it in the chat just so I do not forget to do it, and label it here sector CC windows. All right, so that guy's dropped in. Now, when I load this, you're going to notice it doesn't wipe out my whole layout. It's just going to add some windows on top. Okay, so what in the world are we looking at? Well, we're looking at compare count windows, and of course the writing's a little bit small, but what it says is oil and gas extraction, construction, finance and insurance, accommodation and food services, healthcare, utilities. So what I've got here are 10 sectors. Now, needless to say, probably, a lot of different ways to do this, but I'm going to show you how I did it, and then you guys can adjust accordingly. Now, in the larger count, compare counts that we showcased earlier, looking at, just the market caps. Well, I'll tell you what, let me just go in here, and this is going to tie into what Frank was asking. How do you set up a compare count window? Well, these are already all programmed. Of course, we could always blank them out from scratch, but the methodology is going to be the same. When we go into a compare count window by right-clicking and hitting configure, you're going to notice we've got a green data side and a red data side. And when we click on configure for the green data side, we in essence have a whole strategy or alert window dedicated to the green and the red side. So these are going to be the same settings now on these heat map, the heat map for sector. These are going to be different settings than the main compare count windows. Now, you can always go in there and set them up in the traditional sense, which would be this. On the big compare count windows for market cap, I'm looking for 1 minute volume in excess of 300% or 3 times normal during and sustained during that opening 15 to 20 minute period. I believe all of these are just going to have a certain dollar volume and a setting of 2 times normal. Now, I wanted to show you guys these and distribute them today because I too lag sometimes on things I need to do. But today was a very good instigator for me. I'm like, I need to get my sector map built out the rest of the way, because think of it from this standpoint. Okay, you saw today the market had the potential to get very weak based on those opening 15 to 20 minute compare count windows. And then of course, if we set up all these sector compare count windows and you do have the screen space to view these things, or whether you just pull them up 20 minutes after, take a snapshot, shut them back down if you don't have a lot of screen space, I'm going to pack my TV with as many of these as I can, because what's that going to do for me? Well, tomorrow if I see 60% to the buy side sustained after 15 to 20 minutes, then I can look over my heat map, is what I like to call this, and see all the sectors. And most of those are going to be flopping around at 47.53, but then you're going to go, oh wow, what's this one over here? Doing 60% accelerated buying, and then you're going to see one going, well, what's this one over here doing 60% accelerated selling? So this is going to enable everybody to drill down and be a lot more precise. It's just another way to monitor the sectors, but in a format that is what you might call unorthodox via the compare count windows. Of course, how do we point these things to sectors? Well, what you're going to notice is if we go into the symbol list tab here, oil and gas extraction, only the following list. Now, how did I get to this list? Well,
Good back pedal. Yep.
Once we hit configure and we go in here, by default, the sector lists are not going to show up over here automatically. You just have to click the add existing list button here, come down to the bottom, and then you'll start to see all of the sectors that we have.
Yeah.
Just open up this guy down here, make this a little bit bigger. Whoops.
It's a two-step process.
Yeah, and so once you see the sector, you just click on it. Once you do that, it shows up here and is checkable. And then all you have to do, only the following list, check it off, and then you're in business. Simple as that. So I've given you guys 10 to start with. I pulled this from my cloud and I didn't realize that the settings were a little bit different here. But just so everybody knows, let me just give the big cap movers.
Could you save that? Sorry, Jamie, could you save that as like a layout and call it a compare count layout, and that way all the windows are in there?
This is these windows that popped up.
Mm-hmm.
That is layout format.
That's how you did it already. Okay, I didn't realize that.
When they open it up, it's just going to lay these on top, right? And then all you'll have to do is make your adjustments and then find a home for them and save them. But it will not get rid of your previous layout. So once you're done with them, rearranging them or whatever, it should be relatively easy. Now this guy right here is the compare count window that we were talking about, the original, looking at the large cap stocks. And I just wanted to point out the settings because they're a little bit different. I haven't updated these in a while. That's why the settings are still kind of old. But we've got 3 times normal 1 minute volume in the 1 minute. We're employing earnings, not because we care about earnings, but because we care about filtering out ETFs and iShares. I don't really want to know what ETFs and iShares are doing in that opening count. I only want to see equities because, well, for obvious reasons. And of course, the market cap is being used here, only stocks in excess of market cap of 5.4 billion. So whether you use this layout and modify it, or whether you use this one as the template and just go in and duplicate it and start pointing this to different sectors, right? That's all you have to do is take this main one and duplicate it and point it to different sectors. So I'm going to drop the original in here, but I just wanted to give you guys an idea, a visualization of the concept here about making one of these for all the main sectors so that you can dive even deeper into the pool of clarity. So let's do this. I'm going to put this one in here. And this will be the original large cap compare count. All right, so now that guy is in the chat area, and what I'd recommend doing is just modifying the settings in these guys to emulate these guys. Of course, not saying you have to do it exactly like me, but the way I'm doing it is definitely a good starting point. And of course, the more you watch, the more you absorb, and more importantly, hopefully, the more you learn.
Very good. All right, I just answered you, Todd. I know this might have been a little bit more over some people's head than others, but I did reply with a 1-hour YouTube link, which is getting started, all the basic stuff. If you haven't seen that video yet, it's a great foundational place to start. Thank you, Frank, for the comments. If anybody has any questions about what they saw or weren't quite sure, you can always go to info@trade-ideas.com and inquire if there's something you need help with that you saw today. But please, I also mentioned to another user the Friday sessions from 11 to 2 p.m. Eastern. That's a great time to come on by, and if you've got something custom that you're trying to work on, we can work on that for you using the open forum on Fridays. And then beyond that, make sure you guys sign up for your one-on-one sessions. So, we'll do our best to try and get as much help out there to every different level of user. But again, Todd, I did drop a YouTube link. I think that's going to be a good thing for you if you haven't seen that yet. And anybody else that wants to use that YouTube link as kind of a real basic unboxing, getting started, working with a lot of the basic stuff. Some of the stuff Jamie went over here, we do on a weekly basis, and occasionally we get a little bit advanced. But some people do appreciate that. All right, Todd, yeah, check it out. I hope that works for you. And please, Todd, also drop by our Friday support sessions. We don't have an
Exactly.
agenda. We don't have an agenda. We just wait for the questions to come in and we deal with them specifically. So that brings us to the top of the hour. Jamie, why don't you put up the slides? I'll let people know how they can come in and save with a promo code. First off, we do have our Friday podcast. Last podcast was myself, Jamie, and my good friend Brian Shannon, who's actually going to be the keynote speaker this Sunday, October 1st, at our Trade Ideas Looking for the Holy Grail Summit in Carlsbad, California. If you can't make that, I'll give you our Twitter handle in just a second, and on our Twitter feeds, we've been doing a lot of linking to people who want to join the live stream from the comfort of their own home if you can't make it to Southern Cal. So podcast every Friday, just search Google Trade Ideas Podcast. You can download it from your favorite app stores and subscribe easily, but last week was a good one, kind of leading up to what's going to happen this Sunday. Trade Ideas is going to offer you a 15% promo code for your first month or your first year. It's all caps. It's right there in orange, Trade Holly. So when you go to checkout, whether it's a standard version, which is all of our scanners, or the premium version, which is all of our scanners, plus the AI and plus the back testing and shareable price alerts you can share with each other. Those are the two basic differences. Either one of those subscriptions, you'll qualify for a free one-on-one, 1-hour mentorship where you can ask anything you want. We share our screen, we set you up, get you going in the right direction. But again, it's typically a 7 or 10-day wait because of the popularity of that, but it's actually a good thing. It's a good thing to get in there and get your hands dirty and create some questions, create some ideas, get yourself painted in a corner and let us show you how to get yourself out of there. It's a lot easier than just doing it one-on-one session from absolute scratch. It's nice to have just a little bit of usage underneath your belt before your one-on-one. So Trade Holly, all caps at checkout. We'll save you 15%. Thank you. If you want to follow Jamie and get those 20-minute after the bell readings, it's at QuantBot on Twitter. He does that every day religiously. Myself is at Today Trader, and our CEO Dan Merkin is at Trade Ideas #1. We have a Facebook page as well. Again, info at trade-ideas.com is the best place to start. Then we can route your question to the right person. But you do see Jamie's and myself email there on that third line. The fourth line is the phone number. That's really not used, nor is it monitored. It's mostly voicemails. People who are having questions about their account, you'll get a call back after leaving a voicemail. If you've got a question about a setup or a configuration, typically during market hours and even after a little bit, we've got on our homepage at trade-ideas.com that live support help at the bottom right corner. So live support during market hours is always available to you guys on our website. Otherwise, use the info at trade-ideas.com and we'll get that routed to the right department. So that's it. The webinar was recorded. I'll go ahead and stop the recording.